Good afternoon, everyone, and welcome to the Share Series Company Spotlight on Allego. I'm Matt Somerville, a sell-side analyst at D.A. Davidson, following the company as well as the EV charging infrastructure space overall. With us today is Mathieu Bonnet, the company's CEO. At present, Allego is the largest pan-European CPO or charge point operator and one poised to benefit from secular electrification of the automotive industry. To learn more, I'm going to kick it over to Mathieu for a brief 5-minute or so overview, followed by a bit of a fireside chat between Mathieu and I will also field inbound Q&A from the audience that comes through my email. With that, I will hand it over to Mathieu.
Well, thank you very much, Matt. I'm very excited to be here with you and to talk about our business and our industry. Maybe as an introductory remark, I would like to highlight some very important news from Europe coming a few weeks ago with the comprehensive ban that has been decided by the European level of fuel cars as of 2035 in Europe. So it means that in 2035, all the cars sold in Europe will be, basically speaking, non-fuel but electric. That's great news for our industry, of course, but we need to equip and to make the infrastructure available for all these cars to be charged. I think that's a great momentum for us. EV penetration was already high. We are double-digit EV sales already in Europe, and it's going to grow, of course, in the years to come. Allego is focusing on fast and ultra-fast because if we want to charge all these cars, home charging is not enough in Europe because 50% of the households do not have any garage or driveways to charge at home. So you need to go to a public chargers, and when you go to a public charger, you want to do it quick. You want to charge quickly, so that's the reason why you need to have a fast and ultra-fast network. So we roll out a big network in Europe, and this, of course, we are at the beginning, and we have many sites to roll out in the 15 countries we are already in.
Perfect. So why don't we go ahead and start with some of the Q&A, Mathieu. Can you talk a little bit more about how will the European EV charging market evolve in the next few years? And can you discuss EV penetration rates presently and how you see that evolving maybe over the next 5 years based on some of the things you discussed in your intro?
Yeah, sure. So what I've just said is that basically speaking, in roughly 10 years, a bit more than 10 years, all the cars sold will be basically EVs. Right now, we are, depending on the quarters, but around 12% or 14% of EV penetration in terms of all cars, passengers cars sold in Europe. So all in all the next quarters, we will see growingly these numbers reaching 100% in 2035 for sure. So it's going to be a very massive market for us because we have already millions of EV cars to charge, and it will be much more in the future. If we take some comparison with the US, we are in a single digit only in the US. And I think that the trend, the difference, at least 50% between the US compared with Europe is going to last in the next year. So really, Europe is the market to be, and it really is the market for the EV because of the policy decision that has just been taken.
It sounds like you're primarily focused in Europe. Is it your intent to not move into the North American market? And on that note, Mathieu, can you describe the competitive landscape to your business in Europe specifically? Who are the main competitors? What are your moats versus theirs, etc.?
Well, first of all, Matt, to be clear, our roadmap is really in Europe right now. And again, more and more, and it has been accelerating during the last months because of what has just been said. So we are focusing in Europe. Maybe in the future, we will go, and we have technology that could be useful for the US, and we'll see what can be done. But so far, we are really focusing on the different countries in Europe. In terms of competitors, and that's the reason why we have very broad ways in front of us. We have some I would say, oil and gas companies that are interested in refurbishing their fueling station. And here we have three big ones in this area. I would say that's Shell, for instance, BP or Total, but they are not in the space we are and the location we are. We are focusing more ourselves on retail spots with big malls in urban or suburban area where we have the traffic and where people can park their cars. So we have very strong partnership with retailers, with landowners. We make the most of their traffic and of their customers, and we bring a new service with them. And with that, we are focusing on the most interesting sites because we have the technology and we have a unique technology to forecast the traffic given the number of cars around, given the patterns, given the inhabitants. We have working with more of 100 variables to catch and to understand what's going on in order to be sure that when we install a charger, a fast and ultra fast charging station, we have the traffic, we have a high utilization rate in order to have a very good return. Because the goal is not to install chargers anywhere. The goal is to install charger when we could serve and when we could provide the charging station to our customer and we need to be where they are. And it's not automatically in the fueling station because they want to have a new experience, to be clear.
To put a finer point on that, what do you see as the largest barriers to entry for emerging competitors to come into the EU, and how do you defend your competitive positioning? And it might be helpful to frame up how you view your market share today within the EU.
So regarding the market, our market share, and let's begin with that. We consider that on a global scale in EU, we are around, in energy, what we compute, because that's the energy we sold, around 12% in fast and ultra fast. And with that, we'll be very happy to maintain that, and we have all our backlog, all the leeway to do that. What is important to have in mind in these is more and more it's a technological business. We have full control and full ownership of our technology on a comprehensive base because we have developed our EV platform, which means that first, as said, we look for the best sites, so with the traffic. But once we have installed our charger, we onboard the different chargers and we monitor them on real time. We make the most of the energy supply, and we can trade the energy, and we can feed the energy, for instance, for the renewable assets on our charger, and we are directly on the market on real time, and we go through all the payment subject, and we can provide any means of payment in order to be sure that you can charge on our charger. And because we are in full control, because it's our technology, we can develop all features we want, like plug and charge. So you plug and you are automatically recognized and charging. I think that's a very important mode. Without that, you don't know where you are going to install your charger. You are not in control of what's going on the protocol, on the different way to monitor. So it's very difficult to make a business. Then, on the link with that, we have the sites. We have more than 1,100 best location sites in order to install our charging station. It represents 2.5 years of running station and of work in station for us. So it's a great asset that we are really building right now. And once we are on a site, because we have exclusivity on the site with the mall, where we have a kind of big entry of buyer, because nobody can come alongside our station. So that's really why it's very important to secure these sites, and we are one of the first ones to secure the best and the more numerous sites.
I'm going to go ahead and field a couple inbounds from the email, Mathieu. Is there much M&A in the space, and do you see Allego as an acquirer?
So far, we don't, to be honest, in Europe, we don't see a lot of M&A, but we do expect to see some changes in the future. First of all, because we do believe that scale is important. So if you cannot reach a certain scale, in order to invest and still going on investing in your technology, you will have some, of course, some problem and to offer new services with your customers. And the bigger you are, and that's what we see now, we are able to sign big contracts on a pan-European level. I would say in the US, I would say if I take a comparison in different states, and the customers and the landowners, for instance, big retailers, they know that you have the capability, the knowledge to roll out with the same quality everywhere, which is very important to be able that your customers, you drivers, can have the same experience everywhere with some loyalty programs, for instance, for vendors, etc. So I think that size will be again more and more important for the future, and that's the reason why M&A will, I think, we will develop, and we might be interested in some places where we want to grow faster, for instance, or where we maybe are not at the level we would like to be in our organic growth. So we will see what's going on this, but yeah, we might come with some good idea about that.
Got it. And then this is also coming from an inbound here. How much of a lag time is there from when demand materializes to rollouts of new charging stations? And the follow-up is the rollout tied to continued production on the EV side? So I think what this individual may be asking is, how well aligned are charging infrastructure deployments to EV production, and is there a lead versus lag to that?
That's a good question. What we see is that with our forecast and the traffic forecast I've just mentioned with the tool, we are for the years to come, I think for the next 5 years at least, in terms of supply, so infrastructure, charging fast and ultra fast, we are a bit behind the need. So that's clear that we are catching up with the number of EVs. Of course, at the end, I think in 15 years, there will be a match, but here actually that's I think we are a bit lagging. So that's the reason why there is a very high demand in our infrastructure. The utilization rate, meaning the number of sessions per day per charger on our station, is increasing continuously. So it means that of course we follow the trend of the number of EVs, and the more EVs we have, the higher the utilization rate, because we can be sure that we are the right spot. So yes, I think it would be, the demand is a bit higher than the supply. Just to give you an idea, during the rollout and timing, when we have selected the sites with the right characteristics, it takes some time to install the charger, because we need to get permits, we need to have the grid connection and to take care of that, and it's quite an asset, because when you have a big grid connection, and here we are talking about megawatt of capacity, you are going to be granted one, and you want to be the first one on a specific area, because the grid operator is not going to grant another one just 2 months later to another operator, even though it's 500 meters, because it's really a constraint subject, the grid. And in the US, we have as well this subject, even though in Europe, it's a bit more robust than in the US. So it takes some time. And all in all, we can have a lead time between the location find and the commissioning of the station between 9 to 12 months for the longer term.
Got it. I want to ask a question about your business strategy, and I'm going to tie this into a question that an audience member has. Can you talk us through the site selection process? How do you negotiate with the landlords on exclusivity? And this viewer wants to understand, when you say best locations, and you've said that a couple times, what does that actually mean? Talk more about that. Okay,
good questions. So maybe to begin with best location, what we call best location for us, that's really a threshold of return IRR we want to reach. So depending this, so we have a very stringent one, and if we cannot reach them with an optimized layout, given the traffic we see, we do not invest on sites. So we have a top-down and bottom-up approach. The top-down is that, okay, it seems that we are in a good area somewhere on the map, I would say, and let's see where we should be. So we screen all the, I would say, all the maps, all the screen, all the buildings or public lands we can have, or private lands as well. And when we find the right spot, meaning with the right IRR, and given the size, if it's a very big one, in that case, we need to find a big plot, otherwise it's a smaller one, where we find out the landlord and we begin to discuss. And so most of the time in this case, it's, I would say, over the counter transaction, because there is no tender or whatever. We invest on the sites, so the landowner is most of the time quite happy that we can bring a new service. Sometimes we have a small rent, fixed rent, or a kind of revenue share, and generally speaking, the figures, it's 2%, something like that. So it's quite manageable. And we have then a bottom-up approach, where then we have landlords who decide, okay, I would like to install infrastructure, EV infrastructure. I just want to have a kind of tender, and we can be interested. And in that case, we check all the sites, and we can go and say, okay, here what we are ready to do. With these sites, we take maybe 50% of the sites because the other ones are not interesting, and we want always the exclusivity. If we do not have the exclusivity, we do not sign. We are not interesting, because we are managing our assets now for an average time of 15 years, and now we are signing to 20 years. And so we want to be sure that nobody will come. And if we need to have more chargers, we have the right to put more charger given, but it's our call to make sure that we can catch and make the most of the traffic that will increase, of course, in the future.
Got it. I think it's important to talk about what differentiates Allego from the software side of things, the technology from your other competitors in the EU EV charging infrastructure space. What makes your technology and your approach so unique?
So first, I think one big first one, that's the comprehensive tool we have. We have developed all the tools we need, really, from the energy management. So maybe at the first glance, we could say, okay, there is nothing to do with charging, but as a matter of fact, it does, till the payment. And that's the second big case for us, we are one of the only one to control all the chain, meaning that we are in full control. We do not depend on any other provider of software. We have developed our own technology. We own everything. So that's very important, because the market is evolving so quickly. We want to be sure that we can add any features, new features we want, like plug and charge with the ISO right, in order to charge any cars, and not one brand, but any cars. That's quite important, for instance. But as well, if we want to add a new payment solution that will come up, we are able to do it, and we don't depend upon any other third party. That's a very important point. And just to give you a flavor about this comprehensive chain, with our techno and platform, we can link directly on an electrical, and sorry, that's a bit technical, but balancing perimeter, renewable assets, for instance, to be sure that they inject, well, their power in our balancing perimeter, where we have our charging station. So we can pinpoint where the energy, as a matter of fact, can come from. So that's quite important, because we want to be sure that we are, for instance, green from well to wheel. And because of that, we tend to sign long-term agreement with these renewable assets, because they have most of the time very low levelized cost. We can have very interesting price on a long term, because again, 10 years, for instance, because our chargers station are here to last at least 15 years.
Got it. Question from the audience: who are your biggest customers? And maybe alongside that, Mathieu, just maybe talk about the diversity of the customer base, the diversity in the fact that you're operating in 15 countries. Do you have aspirations to further expand throughout the EU? Maybe just spend a minute on that.
Sure. So we have two kinds of customers. We have B2B customers, and it is linked as well with another activity we do. We provide charging solution to B2B customers. Here, that can be fleets, like the Dutch Post, like for instance, and we provide charging solution for their fleets. But as well with OEM, we have signed big contracts with Nissan to equip all their dealership in Europe with more than 600 dealerships. So that's the B2B side. But we have as well UMAT, the end users, and we have a lot of course end users. Either they come with, I would say, a specific program, as through a lease car company, and in that case they get a token, a card to use our charger, or they are, I would say, just customer coming on our charging station, and they can pay with credit cards. So we have both kind of EV drivers. And last but not least, and it is important and it will grow, we have some fleet operator as well that will come, either passenger fleets like car sharing, but as well in the future, and it begins, logistics company that are quite interesting in our charging solution, either in their premises, or they want to make the most of our public charging station in order to charge on the go.
One of the things I think is very important to talk about, I mean, you're sitting here with a secured backlog of 2.5 years. Maybe just put a finer point on what you mean by secured backlog, and put a little perspective around how you plan to fund that going forward, Mathieu.
This one is a good question. So when we talk about secured backlog, it means that the contract is signed with landowners, for instance, in order to equip with a program, or I don't know, 100 sites, and we have signed this, for instance, in Germany, and you can see that on our website and PR. And so it's signed, meaning that we have the duration of the lease and we have the exclusivity. So when we talk about backlog, we have signed and exclusivity and 15 years. That's at least. So that's the characteristic. So now we need to roll out. To roll out, we need to install the chargers, well, buy the charger, because we own the stations, on board on our EV cloud platform, and operate them on the long run. So in order to fund them, that we have different ways actually to do it, and that's important to highlight that. What is important is to own these kind of contracts, because with this kind of contracts you can find financing to do that. And here we are working on different solutions with bank facilities, for instance, because we are kind of secured cash flows because of our tool, and because we have a very high trusted and confident track record of the traffic. And that's the reason why having this tool called Allego of traffic is very, very, very instrumental in the development of the company. So that's a key technology for us. We have as well some non-recourse debt with project finance in Europe, which is very keen on developing this new infrastructure. We can as well find out some investor alongside us, like minority one, in order to develop some specific site. So we have different ways to develop, and we will have as well some capital that can come along. But we have different means to find financing for charging station. The most important thing is to create the pipeline we have built now, which is very valuable, with all the characteristics I have mentioned, and with a track record, and with the growing utilization rate.
To my knowledge, Mathieu, Allego is currently the only adjusted EBITDA positive EV charging infrastructure company that I'm aware of. What has allowed you to reach EBITDA positive, arguably years before other peers in the space?
Well, I think we have, there are two things. First of all, we have developed these two activities. So we have our own network, I've mentioned, and we develop on our, that's CapEx we need to invest with a very strict and rigorous process in order to be sure that we are at the right spot, so that we can have, once we install the chargers, the high utilization rate needed, so that we have already the traffic, and we are positive margin, from day one. That's quite important. So it means that we can have some cash flow. That's quite essential. And we have as well some very successful B2B activities where we develop for some others, for instance, and with a very interesting margin, because we have the knowledge, and that's quite important, and the technology to make it run for the third party. And of course, we have now, because we have been created in 2013, we have the experience to make it happen efficiently. And we went through different experience in the past, so now we know it works. We know the quality of the hardware, what kind of hardware we need, what kind of station we need, and what kind of return and maintenance and kind of operation we need to make it fly. That's quite essential.
One of the things that I think is important to hit on, because it's so topical right now, can you discuss how the company has been or maybe not impacted by supply chain and inflation? And with respect to inflation, I specifically want you to hit on inbound electricity cost and what that's meant for the company, if anything.
So regarding this inflation, there are two things. Of course, there is I would say the hardware part, but it is quite manageable for us because we have long-term framework agreement with hardware manufacturers, for instance. And I just want to remind the auditors that we do not manufacture our hardware for us. There are many vendors, and we wanted to focus on the upper layer of management with our EV platform and deal with all the data generated by that. Okay, but we have long-term framework, and because we buy in bulk and we are big player here, we can control this price. Regarding the energy price, that's something which is a bit different, which is our variable cost on our charging revenue, where there are two things having in mind. First of all, we can have a pass-through. Okay, and right now, because I said the demand is higher than the supply, I would say, we are able to pass through some increase because of the price of electricity. And because of that, and we have mentioned that, Matt, just before this, but we have increased our price of 70% at the beginning of this year, and we see the demand growing, not because of increase of price, but because the alternative, what it is fuel, and we are 25 or 30% cheaper than by millage compared with fueling your tank. That's one. The second point is that, and that's work in progress, but we are very well advanced with what I've just mentioned with the energy management, with long-term power purchase agreements we sign with renewable assets to decrease and to be immune of inflation of this price on the long term. And we are quite advanced already. We have not hedged everything, but we are in this process, so that for the future, we want to be quite immune with any new price increase for electricity. That's these two components, pass through and be sure that you can be rightly supplying.
Got it. And then one final question, Mathieu, before we head towards closing this out here. What are your biggest concerns in fulfilling the strategy? What keeps you up at night?
Well, the pace of the rolling out of our stations, because we need to have all the organization and the people ready to install all of these chargers. We need to make sure that's ready execution. We have the grid operators, and we have the time. I would say not too much time to wait for having all the permits. That's quite important because we have more and more cars coming along. The good news is that because of the policy in Europe I've just mentioned, well, the regulation is aware, I would say, that we need to improve and we need to accelerate in order to provide all the electricity to our cars. And just maybe I wouldn't say it's the last comment, but now in Europe, that's summertime. We see many drivers going on holidays and more with EVs, and they want to be sure that they can charge when they arrive at their holidays resort, I would say, but along the road, and we are here to make it possible. And it's really booming now with this kind of trends.
That's great, Mathieu. Are there any other closing remarks you'd like to make before we wrap it up for today?
We are in this booming market. The policy is here. The shift will come, whatever happens. So now, well, look at the figures. And I think that's quite important with what's going on globally speaking. Really, EV will be a booming market for the next years.
Great. Well, with that, thank you all for joining us today. And as a reminder, tune in for the next event on July 27th, which will be focused on ESG. Thank you again.
Thank you, Matt. Thank you.